Yes, sir. Yes, sir. Here we are on December 15, a bloody day in the stock market. I feel the pain. I'm sure a lot of you guys feel the pain too. Crypto is just getting decimated right now. It's all getting decimated. There is literally no hostages right now. It is just getting decimated. And this is honestly exactly how my portfolio is doing right now with the hedges that I put on coming in today. I had some puts coming into today, and I gotta be honest, it's doing absolutely nothing for the portfolio. It is literally a Cheeto just holding up the doorway for all of that red, all of that downfall to come in today. It is just gruesome, gruesome today, guys. How is everyone doing? What is going on, David? What is going on, ESS? Appreciate you guys for tuning in here. Anyone, again, who is on the Twitter channel, go ahead and subscribe and get on the Wolf YouTube channel. That is at Wolf_financial is the handle for that one on YouTube. We're live on there 4 days a week, plus additional content up there for all of you people to enjoy very, very, very much. Man, I mean, it's let's share some market action right now because oh my goodness. Oh my goodness. Bloody. Yeah, we got the Qs down here below the 20 and the 50-day moving averages over here, which is not really a good thing you want to see, especially for that short-term price action. I got the green line over here is the 20-day moving average. The blue line over here is the 50-day moving average. For anyone who's actually wondering, I mean, it is just gruesome out there. On top of that, we have BMNR down 10% today, 10%. I have over here the price line for Carisdale Capital. They shorted it at 59.20. These guys are up. What is that? 100% of the position? I don't know, 50% of the position of that short right now. Just brutal right now. Amazon down 1.6%. Broadcom down another 5 to 6% coming over here testing the 100-day moving average. This needs to hold. Like if Broadcom does not hold this 100-day moving average, I mean, it could come all the way down to 280. I mean, I don't know, who knows, but like this is a massive fall ever since the most recent earnings that they had reported, and it's just Nebius is down 7% today. A lot of people are feeling that pain. I'm feeling that pain. IRN is back down in the 30s right now, and it is not just slowly falling into the 30s. It is just crashing into the 30s, already down to 35.49 on the day. Bitcoin back at 85K to end the day. You know, it was actually, I thought we were going to get a little bit of that midday bounce action happening, but it just did not happen. Bitcoin is near the lows of day today. Amcor, it's doing okay. On Semiconductor, the crux of my portfolio is actually doing pretty good today. And on top of that, you also have Adobe down 1.5%, but it's not bad. I think Adobe is going to do pretty good long term. I mean, short term, if you have the whole market falling like this, I don't think anything's going to save you if you're in mega cap tech, or even if you're in tech in general. Tech is going to feel the biggest pain of this market when it is pulling down this much. So you need to be careful, guys. Be careful out there. IWM is down 80 basis points today, but I would still argue it's going to find a little bit of support here on the 9 EMA. Man, and look at this, just into the close. The Qs are heading toward the low. Dude, it is just brutal. Well, anyways, guys, we have quite a good show on here for you guys. The whole Wolf crew is actually at a massive retreat in Puerto Rico. Shout out to those guys that are out there. Shout out to everyone who's still here sticking it around. We're still trying to hold the fort down in the Wolf team. I'm sure there's more than a few guys out there holding the fort down. So salute to all of you guys out there. We got more than a few things that are out today. Actually, I don't think, I'm not going to say I don't think that anyone even noticed, because a lot of people probably noticed that Tesla is pretty much trading near all-time highs today. And we're going to go into a little bit of the reason why that they're trading a little bit strong today, or not a little bit strong today, about 4% today, while the entire market is just falling off a cliff. We have renewed fears in the semiconductor market. I think a lot of this really has to do with the cost, or with the credit spreads, or the credit default swaps for hedging against your bets when it comes to Oracle funding. I think a lot of that is trading. I think I read something that's near around 2008 levels as far as the CDS, or credit default spreads, or swaps for Oracle. We're going to get a little bit into that one. We're going to get a little bit into ServiceNow. They recently had a $7 billion acquisition of a cybersecurity company, a small cybersecurity company. Well, actually, $7 billion is definitely no small cybersecurity company, but ServiceNow is sitting here at about 765. It's down about 11.5% today. I mean, clearly the market is not happy with it, but I would really argue that a day like today is really not the day you want to announce an acquisition. But they're definitely planning for this for a while. They've been partnered with Armis for about more than a couple of years. I think 2 to 3 years they were partnered with them. So they just tied the knot in there. CEO Bill McDermott is a hustler. That guy is doing really well. You know, stock may not agree at the current juncture, but I think it's good. It's a good long-term hold when you think of a company that's in an enterprise platform. We'll get a little bit more into that one, dig into a little bit of fundamentals there. And the last thing we're going to kind of get into is just a little bit of preview of what's going to happen this week. We have Micron reporting earnings on Wednesday after close. We have Nike and FedEx reporting on Thursday after close. Going to give us a little bit of view on the consumer. I mean, maybe we're going to bring a little bit into Fed in here and exactly what is happening behind the noise there, and a little bit into what the Japan, the Federal Reserve of Japan, or the Bank of Japan, actually hiked rates for the first time in quite a long time. So that was actually pretty interesting to see. Maybe, I don't know, maybe that has a little bit to do with right now. But yeah, I digress. All right, so NVIDIA is sitting over here holding on to some green. It's up about 75 basis points. NVIDIA actually did have a story this morning, which is pretty interesting, that they're going to be looking to ramp up chips, the H200 chip specifically, into China, as they're starting to see a lot of demand out there. But the ironic thing is that you're hearing the other side from Chinese media. Now, I'm not going to try to stand in between these two countries and figure out like who's right, who's wrong. You know, I want to see the numbers. I'm more of like, show me the numbers type of guy in order to figure this one out. But let's remember, NVIDIA China sales is not factored into its most recent quarter or its guidance. So any additional revenue can bring in from selling chips to China is always going to be a great thing if you're an NVIDIA shareholder. Today, the stock is a little bit green, which you got to be pretty happy today. Out of all this redness, NVIDIA is actually green today. But, you know, the whole market's definitely coming down too. Also, Tesla's, like I mentioned, is another stock that is green today. I don't believe it did it hit all-time highs? Let's see over here. Oh, wow. Oh, no. It did not hit all-time highs. The last time we had an all-time high was December of 2024 for Tesla. It looks like the closing all-time high, it's not even going to hit. The closing all-time high was actually $479.86. So if it could like murk up a little bit there by like maybe 1% before the end of the day, that is going to be a new closing all-time high for Tesla. But a 52-week or an all-time high in Tesla is around $488.54, which we did not hit today. The high today was $481.77. So not quite close. But, you know, the outperformance today, the significant outperformance of Tesla today compared to the rest of the market, is definitely something you do not want to forget about. So we're looking at a pretty nasty close over here. We'll continue to take a look at it. But I do have a video that I want to share with you guys of Mr. Daniel Ives. He did an interview on CNBC this morning. Let me just make sure that I want to be sharing the sound. Hold on. Sharing the wrong tab. Boom. All right. Gonna play this for you guys real quick. Just a few minutes here.
Billion market cap by the end of that year. And for more, let's bring him in. He's here on set with me. Dan Ives is Wedbush Global Head of Technology Research. Welcome.
Great to be here.
You could have picked an easier one. You know, maybe NVIDIA. Like, why Tesla to you? Is it still so clear? For all the ups and downs, for the auto industry, for all of its ambitions, everything they want to do is always delayed. Granted, the market cap, you know, is still phenomenal. Why do you feel so strongly that 2026 will be a great year?
I think it's about autonomous. I mean, when it comes to physical AI, I think there's nothing better, you know, when it comes to physical AI than NVIDIA and Tesla. And I think this is going to be a golden chapter for Tesla. When
physical AI.
When it comes to robotaxis, when it comes to cyber cabs, volume production, true autonomous, and of course you look at robotics in terms of Optimus. I mean, Kelly, that's why I think we're looking at $2 trillion, ultimately probably a $3 trillion market cap by late 2026, early 2027. That's why it continues to be one of our top picks.
What's the E? So, you know, you think about a market cap that big, you say, okay, it's a high multiple. I don't know what exactly the earnings look like. What are you anticipating on that front? And how does physical AI kind of feed directly into the earnings power it might have?
I mean, when I look out the next 3-4 years, I think earnings power is 4x, 5x. But because it's my view that, you know, when you think about not just the FSD piece, but in terms of true autonomous, it's going to change the whole margin profile. It changes the whole growth story. And I think just going forward for Tesla, the focus, it's, okay, deliveries, do they matter? Of course they matter. But in terms of the next few years, especially Musk now, wartime CEO in terms of pay package, as that's already cemented, this is just the start. And they're also going to have an ownership of XAI. You look what's happened in SpaceX. I mean, I think we're now talking about this next AI chapter that's happened across the Musk ecosystem.
We had Dan Primack on last week, and he said, I basically asked him, or he said the question to ask is, why is SpaceX going public now? Do you think there's anything related to financial pressure on Tesla or Musk or anything like that? Or is it a political? Why would 2026 be the year for SpaceX?
I think the time's right. I mean, you could argue valuation, right? Does it approach $1 trillion? It's the same reason why does Anthropic or ultimately when you look at OpenAI and others. I mean, we're hitting at a point where it's only year 3 of an 8 to 10 year build out in terms of the AI revolution. And for the first time in 30 years, I mean, you've talked about this, U.S. is ahead of China when it comes to tech. But SpaceX is an inflection point. I think it's important that it goes public. It's the right time. And look, we are in, I think, 2 more years in this tech bull market, and we're going to see more and more of these great private companies going public.
Won't SpaceX be, if you'll pardon the term, sexier than Tesla? In other words, right now, if you are a big fan of Elon Musk and everything he's doing and the future is, as described, this is the only public equity you can own for that story. Now SpaceX could be the newer, younger thing on the block. What if investors go with that and thus remove some of the halo, right, the community effect around those who hold shares of Tesla and support its valuation just to have a piece of Musk?
Yeah, it's a great point. Look, I actually think it expands. I mean, to some extent, the ecosystem from SpaceX to Tesla and ultimately what's going to be the ownership of XAI. Because the reality is when you think about what's happening here, I mean, we're talking about the next 5, 10, 15 years. Musk at the centerpiece of it. But I think it speaks to when it comes to Tesla, that continues to be the best play.
So I wanted to touch a little bit on this. Let's not forget that SpaceX, I think they make like $15 billion a year in revenue, and they're going to be a $1.5 trillion company in an IPO. And we already got the news today that they are already in discussions to go IPO in 2026. It's going to be the most expensive IPO you've ever seen. And that is unless, of course, OpenAI comes out and exceeds the $1.5 trillion. Rocket Lab has always been that proxy play for SpaceX without actually investing into SpaceX for the retail investor. Average retail investor doesn't have access to the private markets where they can go ahead and they can invest. Hold on, I just wanted to do this one. Where they can go ahead and they can invest in SpaceX, right? We don't have enough access to that capital. We don't have enough for that. But Rocket Lab was the vehicle for that. And if you look over here, actually, I got to go ahead and share the other screen. Here we go. All right, so if you look over here, and the market did close actually, Rocket Lab was doing really well being that vehicle for investing in SpaceX without actually investing in SpaceX, but investing in the space logistics systems, or as Futurum calls the FedEx of space. And it worked for a little bit. I mean, Rocket Lab went from like $45 all the way up to like $63, but today it's down like 10%. Like, it's just, you can go with the momentum of a news story or a news break and whatever it is, but is the reality going to be that Rocket Lab is going to reach $100 today when the whole market's red, right? So you got to have a little bit of patience when it comes to this stuff. Like, kudos to all the investors out there, including Matt Farley, and everyone who is in Rocket Lab, including I'm sorry, there's more than a few people out there that I want to give a shout out to regarding that. Vince has been invested in Rocket Labs in single digits. So as obviously Matt has a massive position in Rocket Lab for quite some time. But, it's not going to reach that valuation today. And I think a lot of people, you need to be patient as far as letting certain things play out, right? Like, the momentum has its momentum moves or has its strong moves in the middle of massive news that's coming out as far as news catalyst goes. But when you have the whole market that's red, high beta is going to sell off, right? So the Qs ended up down about 50 basis points today. we did reject actually we closed below the 50-day and 20-day moving average. Where's Rocket Lab at today? I mean, Rocket Lab is still pretty strong here. It's above the 50-day moving average, above the 20-day moving average, above all the EMA. So Rocket Lab is still pretty strong today, and Tesla is just knocking it out of the park over here. So let's go ahead and let's finish off the final parts of that interview with Mr. Dan Ives, and then we're going to jump onto the next segment.
Play, because I think autonomous is worth $1 trillion alone. You think about Optimus in terms of true robotics. And as this all plays out, I think globally, I mean, they can own 70, 80% of the autonomous market, globally over the coming years.
I know you think that full self-driving penetration could be as high as 50%. In other words, half the people who buy a Tesla pay the extra money to have that option, which would be, as you say, a game changer for margins and for the stock. So that's part of what you're talking about, is for those who own Teslas, they use this technology. The other part is the cybercab, what's it called?
Yep.
And how would you describe its position in this vis-a-vis Waymo, where Waymo also does quite well? The cars are really expensive, regulatory and otherwise. What should we expect on the cybercab front from Tesla?
Well, first, like FSD, you're going to go from penetration 15% to 50%, and I think it could even be higher. So from a margin perspective, that's going to be huge. Look, Waymo is going to be a rounding error relative to what Tesla's going to do. I think not just in the U.S., but I think globally. Look, it speaks to just how expensive those cars are, how they could scale. And I think when you think about autonomous and in terms of the roadmap, I mean, we would expect probably some sort of executive order, going into early next year, where I think it's going to clear in terms of the federal roadmap. I mean, more and more you're going to go away from the states to federal, and that's going to be extremely important for Tesla in terms of where I think they could take robotaxi.
Yeah, so like I was saying, Tesla did not close at an all-time high today, unfortunately, and it also did not make a new all-time high today. But we're still going to be a little bit of patience with this one. If you're a long-term Tesla investor, you're going to hit, you're going to hit bumps across the road, and whatever. But what do I think? I think that Tesla was very near an all-time high today, and I think that you need to have the market come back for these tech stocks to continue the second leg up. I am a somewhat believer of the Santa Claus rally this year, but I don't think it's going to happen today. I don't think it's going to happen even this week. It's probably going to happen tomorrow. The hedges did help the portfolio out a little bit today, but the portfolio is still down pretty nastily today. So, going to sit on that one. All right, let's move on to the next topic. Now, there's more fears that are really centering around semiconductors. We already had the Oracle earnings last week in the market, I believe. Actually, no, Oracle earnings, was that 2 weeks ago? I think it was 2 weeks ago. Oracle had earnings, and it was a monstrous earnings call. Actually, was it last Tuesday? Let me go ahead and take a look at the earnings hub right here. Hold on. Yeah, we're going to check out this Tom Lee interview later on too as well. But where is my earnings hub? We had Oracle report earnings. Was it last Tuesday? Yeah, last Wednesday, actually. They reported earnings last Wednesday, and it was a terrible earnings call. They were avoiding the questions that had to do with the debt circulating around their investments. They also decreased, or their guidance for the following years was actually pretty good, and their backlog came in at $550 billion or somewhere around there. But the market just didn't believe them, and you could already tell with the credit spreads for Oracle expanding, or the credit default swaps expanding. That just means that the people who are loading Oracle debt are hedging their bets with they call it insurance, quote unquote insurance, or credit default swaps. And I guess the market looks at that and they think to themselves, like, why, if this is such a sure bet, why do we have to hedge our bets in this, right? And that's probably the reason why the stock has just been on a rampant downfall since its earnings. But I wouldn't say that this was a rampant downfall, actually, now that I think about it, because I think I was thinking about Broadcom. But this is still a pretty nasty downfall for the stock, right? So it closed over here around $220, and then it's down. It's making new lows since its all-time high. The one that made the biggest move was Broadcom, and it's sitting here at the 100-day moving average, just below the 100-day moving average, actually, which is probably not really a great spot to be unless it's going to find a meaningful recovery tomorrow. So hopefully we see some recovery tomorrow in terms of the stock market and all of these semiconductors in general. But the sentiment is that, look, they have all this debt, but it's not just this debt. Who is going to pay these companies for a lot of the infrastructure they're building out? And that company is OpenAI. And they didn't directly mention it on the Broadcom call. I don't think they directly mentioned it on the Oracle call. But the question here is OpenAI going to be able to pay for all of this debt? Now, I believe in AI. I think supply is still very strong out there. I do think that. How do I? I want to get both of these on here. No. Okay, that's pretty good. I do think that at the end of the day, after all these fears, I think everything's going to be fine. The only thing that you can't really fight on is what the tape is telling you. And if you have here on the markets, if you have here that you take the Qs and it's sitting here below the 20-day moving average, you have all this selling pressure. The Qs failed to make a new all-time high today. Recently failed to make a new all-time high. SPY made a new all-time high, all-time closing high, but I don't believe the S&P 500. It did it. Yeah, actually the S&P 500, but it did it. It couldn't hold it. And I think that this kind of price action is important for the market because a lot of the algorithms in the market, they trade based upon this price action. A lot of institutions do as well. And if you're not holding this bullish momentum in the stock market, it's not going to be good looking. And that's kind of what you saw today. You saw the Qs actually open up today green on the day. Actually, I think the Qs were up like 70 basis points at the open, and it just sold all of it off. So that's like almost a 1.5% swing on the NASDAQ 100. And the biggest weighting, one of the biggest weightings in the NASDAQ are the mega caps. If I go over here and I look at the mega caps, you had Apple down 1.5%. You had Amazon down 1.6%. You had Google, which is pretty strong in the morning, but it just pulled back. Meta was green on the day. I don't know how Meta was green. Maybe those sellers are just exhausted at this point. But a lot of these mega caps didn't do good, except for Tesla. Tesla did pretty good. But then if you look under the belt at the semiconductors, they had a very bad day today. You had Astera Labs down 3.5%. AMD was down 1.5%. You had Navitas down 8%. You had Oracle down 3%. Pure Storage down 3%. Skywater down 6%, which is a pretty interesting one because I'm probably going to be looking at that one at some point. And then if I go down here to probably the most high beta portion of data center, it's the Bitcoin miners and the neoclouds. And you had Applied Digital down 18% today. You had Bitfarms down 8%, Cypher down 14%, Core Scientific down 7%, CoreWeave down 8%, Hive down 10%. You had Hut 8 down 15%, Iron down 12%, Nebius almost did I hit the 70s? No, it didn't hit the 70s. Wolf, TerraWolf down 13%. Like, these are getting hit hard. And you go down to the pre-revenue companies, the ones that are a bit more speculative. You had Oklo down 6%, SMR down 5%. You had Nano Nuclear down 12%. It was just brutal across the board in terms of growth stocks. Even software got decimated today. I'm going to go a little bit into ServiceNow as far as the 12% down day. Why it might be down 12%. But everything in software got decimated today. Even cybersecurity got decimated. FinTech got decimated. Advertising got decimated, except for AppLovin. AppLovin somehow is green on the day. You have Reddit coming back over here to the low 200s. But you have certain travel stocks that are actually doing very well today. You have Booking.com up 3%. You have CCL up 3.5%. So does this really paint a very bearish picture on the market? In my opinion, I don't think it paints a terrible sentiment on the market. I think it's a lot of rotation. If I go ahead and I look over here at the S&P 500 sectors, tech was down 1%. Okay. XOY, consumer discretionary, was up 1%. But that's mostly because of Tesla. Tesla's 20% of this portfolio. You had industrials was up 16 basis points. You had staples up 28 basis points. You had healthcare up 1.32%. You had financials green today. You had real estate green today. You had utilities green today. This is rotation, guys. This is what rotation looks like. It's not about tech. It's not about the NASDAQ. It's not even about small caps. It is about excuse me, it is about money rotating from high beta, high growth, from speculative to value companies. Okay. Even though UNH was not super green in the day, it still ended out flat. I think a large portion of the XLV sector is a lot of these insurance markets when it comes to healthcare, but also a lot of these underwriters and so on. This was green today. These healthcare stocks are green today. It is rotation. If we look at commodities as well, commodities, we could see that gold was green on the day. Gold is, I think, it's sitting near all-time highs. Near all-time highs. Yep. Silver. What's silver sitting at? Silver sitting at all-time highs right now. Okay. SLV is just killing it. This is rotation, guys. So I would not be worried about like some massive bear market right now. At least not right now, because you have SPY trading above the 20-day moving average. But it might be time to be a little bit concerned as far as what's going to happen on the market. So those are my thoughts as far as the fears around the semiconductor. And is this a time to actually be fearful with semiconductors? We'll continue to wait and see what happens. All right. So let's move on to the next segment. Let's talk about ServiceNow. I actually have this clip that I wanted to play on YouTube for ServiceNow. Let me just open it up right here. We'll take a look at this Tom Lee interview in a minute.
Hello, everyone, and you're watching Fast 360 News. Here are the top stories.
Big tech deal incoming. ServiceNow is reportedly closing in on a $7 billion acquisition of cybersecurity startup Armis, and it could reshape enterprise security. ServiceNow, a major enterprise software company known for digital workflows. Armis, a fast-growing cybersecurity startup that protects connected devices in real time. According to Bloomberg and Reuters, the deal talks are advanced and could be valued at up to $7 billion. It may be announced in the coming days, but the talks could still fall apart or attract other bidders. If completed, it would be one of ServiceNow's largest acquisitions ever, showing how crucial cybersecurity has become for enterprise software. Armis is valued in the billions and was reportedly preparing for an IPO before these talks. Demand for cybersecurity is surging after recent high-profile attacks. Companies are paying premiums for tools that protect networks, cloud systems, and connected devices. Bottom line, this deal, if it goes through, shows how big software companies are doubling down on security, and it's a story worth watching.
All right, so ServiceNow is acquiring Armis, which is a not a massive cybersecurity company, but a smaller one, but focuses more on enterprise security of their entire platform. ServiceNow, if you guys worked at any company, or if you guys do work at a company, sometimes you put in like a help desk ticket, whatever it is, and you're talking to somebody. Even like outside of ServiceNow, you don't have to work for a company to see it, but a lot of that assistance that happens in the background as far as ticketing systems goes, or even as far as getting all your resources in your company in one single in one single database, that will be ServiceNow, and they've been leading this for a long time. And in my opinion, I do think one day that ServiceNow will probably be much larger than Salesforce, but that day is definitely not today. However, they acquired this $7 billion company, and let me actually bring up. Let me actually bring up the stock right now. And the market clearly hates it, right? ServiceNow is not new 52-week lows, but they're basically trading at the lows from last April. And it's definitely not favorable even on the chart. It's trading below all the moving averages, below all the EMAs. The chart just does not look good at all whatsoever. And the biggest reason why, in my opinion, is that you have a $7 billion acquisition that they're in the talks for. It's not, as the video said, it's not set in stone like these talks that a lot of software companies can have as far as acquiring company can fall apart, or maybe like they make a decision to not do the acquisition, whatever it is. But ServiceNow is trading at about $180 billion yesterday. And the reason why this is important is because, actually, are they at $180 billion right now? I don't even know. But this is about 5% of its market cap that it's using to purchase this company. and they're going to be financing it, right? They're not going to be doing it in all stocks. They're not going to be spending cash. They're going to be financing this purchase. And again, this has to do with like seeing the return on some of the investments that these companies are doing. They want to see the return, and if they're a little bit afraid of that, then they're going to sell off the stock, which you just saw today. I mean, 5% of the company toward an acquisition that we don't know how much revenue it's going to bring in or not. It leaves a lot of shareholders a little bit concerned. Does it concern me? I sold my long-term ServiceNow position last week to add to some other positions because I'm just trying to consolidate my portfolio. But does this concern me long-term? Not really. It doesn't concern me long-term for the company. In fact, I think CEO Bill McDermott, who's been there since I think around 2020-ish, 2021, before Frank Slootman left, I do believe that he's running the helm. He's a great salesman, and he's got every single reason to make every single decision that he's making for his company in the company's best interest. And I think he will continue to do so. I think maybe one day there'll be a opportunity where I could interview Bill McDermott. That'd be a really amazing interview. But for now, the market doesn't agree, and that's usually what you're going to happen in the short term when the whole market's falling off a cliff. Not falling off a cliff, but when the whole market is down very much in the whole day. Let's actually see the drawdown chart for ServiceNow. So the largest drawdown ServiceNow had was in 2022, around 51% of its market cap. Just last April, it was down 38%. Today, we're down 34% from its all-time highs. Like, that is just a crazy pullback from its all-time highs that it did not actually have since 2024. So we'll continue to see what happens. I just want to pull up the fundamentals for ServiceNow to see how they are actually as a business. And the company is doing amazing. I mean, if you look at this, hold on, let me go to the quarterly chart over here. All right, let me pull up the revenue growth. So for a company with actually last 12 months, let me do last 12 months here. So for a company that has a $12 billion run rate, that's still growing at about 21%, is pretty crazy. I mean, like, it's a $180 billion company, so they're trading at about maybe 10 to 13 times price to sales. On a forward EV basis, I would say that it's still a pretty attractive valuation for this company in long term if you really do believe in the story and do your due diligence, not financial advice, guys. But I think 21% growth is great for that company. But also on top of that, it's not just the growth and scale that you see this company performing at. If you look at the company's operating profit, it continues to expand, maybe not as much as the revenue itself because its cost of sales is actually going up as well. But if you look at, actually, no, what's more important, though, is a margin expansion or around 80% margins for its gross profit margin. So they're keeping the costs under control, which is a good thing to see. If you look at the cost of sales are actually growing pretty tremendously. But I think a lot of that really has to do with the cost of things nowadays and the amount of investments they're putting into AI. If we look at the profitability profile, their operating margin is still sitting around 14%. So they are a profitable company from an operating basis. And on top of that, let's go ahead and look at their net margins. Actually, probably a better place to look at their net margins would be over here in the ratio section. Let me go down here in trailing valuation and look at the margins over here, guys. And net profit margin is around 40%. So this is a profitable company, guys. This is, I wouldn't say extremely profitable company, but usually software companies don't have this profitability profile. The bigger ones tend to. Palo Alto, CrowdStrike is still inflecting into profitability on its business. Salesforce is in profitable motion. Adobe's in profitability point as well. A lot of these companies are profitable, and usually when they become profitable, as far as a company goes, they don't tend to grow on an organic basis, right? Salesforce, a lot of their revenue was grown through inorganicity, which means that they had to acquire these other companies in order to keep their growth at high single digits, low double digits. ServiceNow, we'll see how it turns out from now on, because a $7 billion Armis acquisition isn't necessarily a small acquisition, but you know, a lot of the growth has been organic. And I do think that the company might be able to sustain around 20% growth for quite some time. And this is on top of their 14 and 15% profitability metrics. So a great company to look at. Would love to interview the CEO one day. So Mr. Bill McDermott would be happy to have you on here one day on the Wolf channel. But yeah, I mean, obviously the market didn't like it. In closing, I do think that it's one of the best software companies out there. I do think management is excellent. They had multiple CEOs, multiple CTOs of the company, multiple CEOs in the company that are doing very good. In fact, CJ Desai did I believe he joined as CEO of what was the name of that company? MongoDB. Yeah, MongoDB. He used to work for ServiceNow as well. I believe he was a CTO or CEO. I forget which portion he was, but like this company does hire a lot of quality talent, and I do believe in this company long term. So, with that being said, actually no, we wanted to go over the Tom Lee interview real quick because that was actually a pretty good one on CNBC. So I'm going to go ahead and play that for you guys. Here we go.
Search, Tom, great to have you with us. There's a lot of things to talk about with you in terms of the skepticism now around the AI trade, skepticism around Bitcoin. Are they, in fact, related, do you think?
Related, but not related.
Yeah.
You know, I think the AI trade, I mean, it's been a juggernaut, and we know that the visibility for the next few years is really good. But now investors are just trying to figure out how much to discount, you know, what's the appropriate price to put. And that could drive some profit taking because they've done so well this year. On the crypto side, I think that there has been some concerns about, you know, quantum. And then there was that huge deleveraging event on October 10th. But the crypto fundamental story, I mean, is exiting on a really high note this year. You know, the U.S. government passed legislation and regulations favorable for crypto. And we know Wall Street has expressed a lot of interest in building products on the blockchain. So it's almost like they both have great visibility, but the price levels are just what's being uncertain.
I feel like what's common, though, with both of these stories, though, Tom, is investors questioning the growth, the trajectory of growth going forward for both of these stories. Not to say that things will contract, but maybe growth won't be as strong as we've seen. We've hit the peak sort of growth rates in terms of the story. The maximum bullishness happened with Bitcoin when the administration came on board and things started to sort of go Bitcoin's way. Maybe that was peak sort of trajectory higher when it comes to growth. Same thing with AI. Now it's a period where you're sort of wondering, will this actually get funded after we saw this massive expansion?
Yeah. Well, in crypto, the best years are definitely ahead because today there's only 4 million Bitcoin wallets with $10,000 in it. There's 900 million IRA and brokerage accounts globally that have $10,000. So that's 200 times larger market. With regard to AI, I do think that the business models need to evolve. You know, you can't just charge $20 a month. I mean, really AI, agentic services, but the market ends up being huge because in the U.S., it's really making 130 million existing workers into super workers. I mean, that's a several $1 trillion market just in the U.S. alone. So I think there's still opportunities.
When do you think that we're going to see the tipping point on that front? And I think arguably you're seeing it a little bit maybe on the margins right now. But do you see a step change 18 months out from now? Is that 5 years out from now? It's because there's also questions, by the way, about some of these services and how valuable they are to people right now. And I know some CTOs and others who are actually saying, you know, we're actually not getting the value out of some of these products that we were hoping to.
Yeah. I think we're in what I'd call the bleeding edge phase, like where everything feels like the tech is in front of the applications. That happened in mobile, which I studied for 17 years, and in internet early days. You know, like when color phones first came out on mobile or even keyboards, people kind of sneered and said, you know, who's going to be using a color screen? And remember famously what happened when the iPhone was launched and how one of the biggest competitors dismissed it and saying it's just a toy.
Right.
I think we're at that phase
He's
with
talking
AI
about
where the
Microsoft.
capabilities will blossom and then services will follow. But that, as you know, the future happens faster than many expect.
So if the business models of these players, which people commonly call the Mag 7 in general, need to change, then what does that do to the valuation? Are we rethinking the valuation? Because, I mean, one distinct change has definitely already happened, and that is asset light to asset heavy, asset spending on assets continues, et cetera. Is that reflected already, or does there need to be further adjustment?
I believe that AI stocks, especially stocks like NVIDIA, are going to actually re-rate higher. Because if Walmart and Costco trade at 37 to 45 times earnings because they're predictable, then NVIDIA shouldn't be 27 times. I also think the banks are really criminally undervalued right now, like a JP Morgan, because that's becoming a technology company. And in the past, people are stuck in the head that they should trade at 1 times book or 10 times earnings. I mean, they should trade more like a tech stock. So I think tech
do
and
you think
financials.
that of all the banks? Or do you, I mean, JP Morgan in particular is invested obviously heavily in tech. But if I said JP Morgan and then I mentioned a bank 10 rungs down, would you say the same thing?
Well, it depends on how sort of evangelized a bank is towards adopting AI and being tech forward.
So, okay, on this screen right here, like is Wells Fargo on your list of tech forward banks?
Possibly. Goldman certainly is, and I think Morgan Stanley has shown a lot of evidence. So I think banks are sort of getting it, but they are really becoming technology companies.
So even at record highs?
Even at record highs.
Thanks.
You know, as many technical strategists will tell you, it's actually sometimes better to buy things at all-time highs.
True.
All right, so few things that I noticed when I was listening to this interview is that one, he's acknowledging the weakness in the market right now, and I believe he's also acknowledging the concerns surrounding the debt of these semiconductor companies, namely from OpenAI, not specifically their debt, but in terms of like how much revenue they could actually bring in. And I do think that, hold on, how do I switch this? There you go. That's actually pretty cool. I didn't know I could do that. There's concern out there, right? Like if OpenAI is going to be like a $550 billion company and it's burning cash left and right, and it owes all these people money that is promising through what he said, quote unquote, selling chatbot solutions for $20 a month. Is that going to be sustainable when you have all this competition creeping up? You have Google Gemini, which is actually the best chatbot in the world, according to Polymarkets over here, according to Kalshi. Is that really going to hold it up? I don't know. And I think any company that's specifically tied with OpenAI is really running into this issue, especially when a large amount of their backlog, when a large amount of their forward revenue is coming from OpenAI. That is what really brings it to the question. And really anything that's touching OpenAI right now is seeing a lot of red, and it's starting to spill into other sectors as well, which becomes a little bit concern for the market. And it sounds like Mr. Tom Lee, he's not concerned about it, but he's acknowledging it, because a market strategist like himself, who has part of their staff also associated in technical analysis, he sees the writing on the wall, but he also sees the rotation. He's talking about financials. Tom Lee's actually been very long financials and thought that it's been very undervalued for a long time, and they continue to buy financials. And arguably, that is outperforming the market right now, outperforming a lot of the sectors in the market right now, especially tech. Buying at all-time highs isn't necessarily a bad thing, but what we got to remember is that Tom Lee and Fundstrat, they manage a lot of money. They can't buy like calls 1 week out in size for the amount of company that they have under AUM, or they can't do all this crazy stuff that us retail investors can do. So they're going to basically shift their portfolio into a certain position, but not all at once over time. So like they can't just be like, you know what? This is crazy. We're going to sell all of our Oracle. We're going to sell all of our Microsoft. They can't do that. They have to sell it slowly because, one, there's compliance issues. Two, their clients going to be asking, hey, why are you selling all this with these crazy moves market? Three, they're going to move the market if they do it. But also, their portfolio manager, they're bullish long-term. In my opinion, I am very bullish long-term. But they also see the writing on the wall with some of the short-term moves we've been seeing and where the strength of the market is right now. It's not tech. The strength is not in tech. The strength is in financials. The strength is, financials. It's in healthcare. It's in a lot of other stuff, but it's not in tech right now, right? And we've been very used to buying the bounces in market, buying the dip in the market all the time. But I would argue, guys, it's worked for 3 years. We need to concentrate our positions in themes that will work for the long period of time, not things that'll work tomorrow. If you're an investor, right? If you're a trader, I mean, go have at it. You're probably doing really well today, considering you probably saw this from a mile away. But if you're like a medium to long-term mindset like me, I have positions where it's like long-term, but I have positions that are like kind of medium-term too. Like these are the things that I look for, right? Am I looking to buy the massive dip on Nebius, IRIN, and Cypher? No, I'm not looking to buy the dip heavy in that. In fact, those charts are just horrendous right now. But, there's certain things that I am keeping my eye on, things that I do want to include portfolio, things that I want to add to in the portfolio. Right now, I'm sitting around 5% cash. I don't know. I don't know if I want to buy anything hand over fist right now. At least not anything that stands out right now. I want to kind of wait and see what's going to happen in the market. Let me actually pull up. Let me pull up some charts here, guys. All right, so if we break, this is not a good looking chart to see right now. You had two crazy selling days. Like, look at these red candles. Look at these engulfing candles here on the market. Not on a weekly basis, maybe not so much. But if you have this and we're trading your all-time highs and we just did this since last April, right? This was when you wanted to buy the dip hard. This is not when you want to dive in and buy the dip because you missed all this. If you missed all of this, this is not the time to nosedive into the market. This is the time when you want to know what you own and when you want to be sure that if the market falls further, which it very well could, we're literally 1% away from all-time highs, that you will be fine seeing that drawdown. And if you look at your portfolio and you're looking at IRIN, which was just $70 the other week, and you're telling yourself, I'm a little worried right now, maybe I wouldn't own IRIN at that point, right? Maybe if you love the price of Tesla today, you better love it if it's $300. I'm not saying it's going to go to $300. I'm saying that if it goes $300, are you going to be okay with that 30% drawdown? You got to be okay with it. IRIN was 3.5% of my portfolio when it was $60. Okay. When I added it to the portfolio, it was 1% of the portfolio at $21. 1%. Okay. Yeah, I traded in and out of it. It was more of a trading position at first, but I decided, when it was $60, I decided this is going to be a long-term position, but I'm not going to change it all the way from my original cost base, 1% of my portfolio. I'm going to leave it the way it is. And I have been. I've been sitting with that drawdown. It went from 3.5% portfolio down to like almost 2% or less, right? And, why did you sell over here? Why did you sell over here? Because I'm just going to hold it through, right? Meanwhile, I have other positions that have done very well. In fact, on Semiconductor closed green today. I was buying here around $45 because I researched this company and I looked at it and I looked at its competitors. I looked at its margins and trajectories. I know that this company is going to continue ramping up as long as the EV story still continues, which is the reason why I think this company is green today, because of the fact that they have a strong presence in the microchip sector for EVs. The power chip sector for EVs. And we're seeing that Ford just announced after hours that they're planning on charging a $19.5 billion bill to build out its EV fleet. Ford, there's no confirmation that Ford is on Semiconductors' client, but their clients are one of the largest OEMs of the market. Tesla is one of their clients, but not on the same scale of SiTime. But if this EV narrative continues, on Semiconductors is going to be part of it. Massive part of my portfolio with call options, continue to hold that one. Look at Amcor, okay? It's only down 90 basis points. Look at this freaking chart. Look at this chart. And it's only down less than 1% today when the Qs are down 50 basis points. The market's telling you something there. I'm not saying to buy it hand over fist, right? Because the time to buy Amcor was down here, especially after their earnings, which was actually pretty good. The market sold off for some crazy reason. That was when you wanted to buy Amcor. Buying it here, what's your time length? What's your time trajectory on this? Like, do you want to hold it for a long period of time? If Amcor goes back to $30, you're going to be happy about that. You're going to buy call options. These are questions you need to ask yourselves as a portfolio. You guys are portfolio managers, right? Of your portfolio. And I only have $1,000. Guys, you got to start somewhere. You have to start building a portfolio somewhere. You think I started this game with I was about to say how big my portfolio is, but you think I started this game with my portfolio? No, I still remember back in 2019, I had $2,400 in my Robinhood portfolio. And my daughter was just born, and it was like, what, anything I could muster up and save, whatever. And I had more money in the bank account, but like I didn't want to put in the stock market because I was like, oh, this is too risky, whatever. I even remember back in like 2010, right? 2010, I played. The funny thing is that I had more money when I was in 2019 with my daughter being born than I did in 2010, obviously. But I was a little bit more risky when I was 23 years old, because I didn't have a family, I didn't have kids, I didn't have a girlfriend. I was doing crazy overtime hours in my first IT job. I was killing it, right? And I was like, let me buy $3,000 of Apple over here at whatever price it was trading, and I held it for like 10 years, and I finally sold in 2021. Like that thing like amassed a big return. I did own Google before that, but then I switched to Amazon, I switched to Apple, and I wish I had Google instead, because Google, I think, appreciated more. But guys, like, what was I going to say? I completely lost my train of thought. When you invest in the market, right? Like you got to kind of know like your trajectory, and you got to know what you're willing to lose. And even like back in like 2019, like I could have started with a much larger portfolio, but I didn't. But at the same time, like, you got to be ready to lose, not ready to lose it all, but you got to be like investing with money that you don't need today. Because if you invest with money that you need today, then if the market is down like 10% tomorrow, you're going to be scared, because you'll be like, well, I have no food to eat next week, right? But if you invest with money that not you're willing to lose, but money that like you don't need today, or at least until retirement, your risk profile might go up a little bit more, which means your rate of return might be actually higher, because then you'll be able to sit through those drawdowns that a lot of people are afraid of sitting down. You'll be able to sit through NVIDIA going from like $176 all the way down to like, if it goes to 150 or whatever, you'll be able to sit through all that because you did your research on these companies, and you know that these are really good companies to invest in. And if you find a company that's really good to invest in and your time horizon is long-term, then if it drops 10%, who cares? Because you don't need the money for 30, 40 years. Who cares, right? My daughter was born. I was investing with money that I didn't need today, especially like some of you guys might have some kids, whatever. Kids are expensive, right? And the money that I'm investing with today, like, okay, it would suck to lose it all. Don't get me wrong. It would suck to lose 10%, 20% of that, but it is what it is. But that's just the game. That is the game that we live in. Like, you cannot invest in the stock market not expecting to lose money. It is the riskiest place that you can put your money in terms of the general financial assets that you can invest in around the entire world. Some would argue maybe it's not as risky, but like, guys, I'm a growth stock investor. I'm not investing in Procter & Gamble. I'm not investing in Heinz ketchup, or is Heinz ketchup? Yeah, HCP. HCP, I think is not HCP. I don't know. I forget the ticker of Heinz ketchup. I'm not investing in Coca. I'm investing in freaking Nebius. I'm investing in UiPath, which is down 8% today. I'm investing in Zeta. I'm investing in Amcor, On Semiconductor, ENS, Photonics. I'm investing in all these crazy Robinhood. I'm investing in all these crazy companies that could be down 10% one day, and no one will flinch out there, right? I've said that with IRIN the whole time. Like, IRIN was trading at $65, and everyone laughed when I said it could be $30 and no one would flinch. Well, guess what? It is at $35, and the market is less than 1% away from its all-time high. Anyone flinching? I'm not flinching. I sized it right. And make sure you size your portfolio right, because if you don't size your portfolio right, you could be hitting some massive drawdowns with some of these high speculative, high beta stocks. If you are full port Nebius at $81, $82, you better be ready for it to go down to $40. And don't laugh. Do not laugh when I say Nebius can go to $40. I'm not saying it will. I hope it doesn't. But what I'm saying is that it was just $140 a few weeks ago, and everyone laughed saying it at $80. And it got to $80 the other week, and people bought it up, and it went to $100, and people laughed about it going back to $80. And here we are again today. What changed? Nothing changed. Nothing changed with Nebius. It is the same company. In fact, I would argue it's a better fundamental than it was back when it was $40. The company's getting sold off relentlessly. The market doesn't care about fundamentals in the short term. It doesn't care about how big your position is. It doesn't care about how many call options you have. It doesn't care about any of that. It will take your money. And that is the reason why you need to make sure you're invested in what you want to invest in. Because if you don't invest in things that you know about, if you don't invest in things that you've done research on, things that you're very willing to hold through any drawdown whatsoever, then you will be able to weather certain drawdowns. But if you're not, dude, if you're not invested in things that you really believe in, when it falls, you're going to sell. You're going to sell. You're going to get scared and you're going to sell. I've been down that boat. I've been down that river many times. I haven't lived in a van down by the river like Chris Farley, but I have been there, guys. So know what you invest in. And with that, we're going to end it today. I didn't know we were going to go on a little bit of a rant today. I should have put the full screen on there to show my homies out there, my face and everything, and not the small screen, even though I had the trading view open over there. But yeah, guys, know what you invest in when you're in the stock market. So I did want to close out with one more thing. I wanted to give a shout out to the Wolf team. Those guys are in the retreats in Puerto Rico right now, and I mean those guys are great. I'm trying to hold down the fort W rant TBF. I don't even know what that means. I'm trying to hold down the fort right now and holding that pretty well. I know Evan's got the back and everything. A lot of those guys and the influencers out there are killing it. But I just want to say thank you so much to Gav, Evan, Sam, who's the marketing manager for Wolf, Charles, and everyone out there. I apologize if I didn't mention your name. Oh, Stock Sniper out there, amazing dude, putting out quality content and putting out those earnings numbers with all of his modeling and everything. Jordan, of course, Emp out there, who's doing great. Eva, who's starting the UK show, special show for all of you people that are out in Europe who want some great content early in the morning for the US, or even if you're in the US, you can go ahead and tune into that one. And a lot of the team out there. It's very cool to be a part of this team, and I think that there's a lot of green skies ahead, and I really appreciate the opportunity to have this show to speak to the healthy audience out there on FinTwit, and giving my input really on like where I think the market's going, things to invest in, and one thing that I can really just make sound again to you all is that you got to be careful out there. We're at all-time highs in the stock market. And we could fall 5% from here, and a lot of these names could be down another 30%. Lower can go lower, but you also want to make sure that you know what you invest in. And I know I'm invested in it, and I'll be publicly sharing my opinions of the market and my portfolio. Again, in the near term, you have any questions, feel free to reach out. You got any suggestions as things you want me to cover, feel free to reach out. And again, thank you so much for the Wolf team. Shout out to you guys. You guys are freaking killing it. All right. Oh, shout out to Troy too. He's running a few accounts on there. Anyways, guys, appreciate you all being here. Again, if you're on the Twitter, go ahead and go on the Wolf YouTube channel, like and subscribe the video. Tune in for the next one's additional amazing content out there.